Hello, everybody. It's Jacob Royall coming at you from Santa Barbara, California. Waiting for a few stragglers to show up, and we're going to get started in just a few minutes. All right, what are we going to do? Michael's somewhere far, far away on a motorcycle. Michael riding motorcycle. Somewhere far, far away with his partner in crime, Ron, two owners of this wonderful company called Back to the Future Trading. And they're not around, so I kind of got my hands on the wheel of this webinar lately. I got this one, and then I think two more, maybe three more. So that'll be a set of 4 or 5. I don't know. See, there's a lot of you are customers, and you come back every week for a sense of, I imagine, for a sense of community, to get ideas, reinforcement of confidence in the software, a multitude of things. And then there's the non-customers, and I imagine you folks come because you're curious, or maybe a friend sent you, or regardless, I imagine you come because you're curious. And I also imagine that you come because perhaps you think that this software and the Back to the Future Trading Company can assist you in your trading journey. Well, it can. This software can. It absolutely can. Do you guys like my background? I can't believe anybody hasn't commented on my background. What'd you guys trade today? ES and Q, crude. Look at the way look at the way that these signals. These are the same signals that were sent out in the emails a few days ago. And yeah, this is one of those days where it's freaky, man. 1 means up, 2 means down. I mean, it's crazy. This is a 14-period HMA, which I've been really into as of late. And look at how just beautifully it correlates with the signals on the NASDAQ 5-minute. It's wonderful. Look at this 1 minute, or sorry, look at this 1250. I'm in Santa Barbara, California, by the way. So if you're on the East Coast, I'm 3 hours time difference. So the market actually opens here at 6:30 my time. This is what we call a teaser. So I'm going to tease y'all with this wonderful looking chart here, and then I'm going to go through some slides, because this webinar it's a lot about selling the software, and it's software that is worth every single stinking penny. Personally, vouch for it. I've been a customer for probably going on close to 2 years now, and the longer I work with with the company, the more I love it, and the software and the tools that they produce. I'm not a sales guy. I am the guy who does the Tachyon Timewarp tool suite demonstration webinar. I'm also a mentor for the company, the official mentor coach guy. But I can't coach you unless you have this software. So you need to be a customer before you can sign up for mentoring. I've passed 4 Apex trading combined evaluations so far, working on a bunch more. Oh, thanks. Somebody actually commented on my background. Thank you, Burhan. Thank you. Thank you. Oh, thank you, Tim. Yeah, I actually changed the color of my candles, and I'm just going to use different colored candles for us today. Feng Shui, I do believe in Feng Shui. I'm an artist by trade / profession from way back. And red and green candles to me are a big no-no. I don't want to see green, and I don't want to see red. I don't want to get too happy about seeing green. I don't want to get too scared seeing red. I want colors that are natural, soothing, relaxing. The lighter colored candles are up bars, and the darker colored candles, the darker brown, are the down bars. Okay, where were we? What's going on? I need a drink. Hold on a second. No, Richard Watkins is a believer in the Tachyon Timewarp software. All right, so there's that chart. We're going to come back to that. I'm not going to do a giant long presentation as far as the slides go today, but I am going to run through them. It's not going to be an hour. Sometimes I can really just go off on these slides, but today I really want to look at charts. Honestly, I haven't looked at any charts other than the NASDAQ today. We can look at some other charts later, but I'm personally curious in the NASDAQ, and we'll look at some different time frames. It's what I trade primarily, and I say that every single week. How do I change this view so you guys don't have to see all the stuff? Slideshow from beginning. Oh, look at that. There you go. Still not full screen, but good enough. All right. Tachyon Timewarp, the power of predictive trading technology. That's exactly what this software is. It's technology. It's almost AI in a way. Probably not officially, but it's close. It's close. Software looks back in the historical data via the data feed, Ninjatrader platform, and finds swing points and extrapolates those swing points, those timed swing points, out into the future. And we have signals extrapolated out into the future up to a week in advance. No other company in the world, as far as we know, offers that in a software. I wouldn't be surprised if certain companies such as Chase, Wells Fargo, the big boys, institutions, if they have some software very similar to this, very similar. Let's run through some slides. There's me, picture me, here's my dog, Lexi. I'm a dad, I have a 7-year-old daughter, and her name is Charlotte. She is not pictured. I just don't want to throw her picture all over the internet. It just doesn't seem right to do. That's me up in Tahoe. Every year I spend a month up in Tahoe, and every time I don't want to come back. Like, oh, poor Jake, he has to live in Tahoe for a month per year when his daughter goes to Australia with her mom, and then I have to travel back to the forsaken lands of Santa Barbara, California. And I complain about it. I literally complain about it because I just like to complain sometimes, apparently. I just love the mountains so much more. Okay, so like I was saying, we are the only company online that gives the times and directions in advance, gives you the trading rules in advance, lets the times and setups pass 2 days later, adds up the results for a pass or fail. So that's what will be, those are the signals that we're gonna be using. I'm not gonna go over a million different charts. That just, Michael likes to do that. I like to just focus on the process. And since there are so many people that attend these webinars that are already customers, I like to just show my trading methodology most of the time, and just focus on just a few charts. So that's what we're going to be doing today. Who isn't a customer? I wish it was easier for me to determine that. And that's why I just kind of try to speak to the non-customers and the customers. It's fun. So yeah, the big thesis here is that although the world looks messy and chaotic, if you translate it into the world of numbers and shapes, patterns do emerge, and you start to understand why things are the way they are. Michael is a trained engineer by trade, and no, that is not Michael, by the way. And yeah, so this trading software is developed by an engineer. I think Ron. I'm not sure exactly what Ron's background is. He's owned multiple businesses, and he's an expert trader. He actually runs the Timewarp trading room, where you as a customer can follow along with his trades live every Tuesday, Wednesday, and Thursday from pre-market till about lunchtime, East Coast. Moving right along. So when I look at this chart without Timewarp signals on there, I can see, because I have, 3 years of trading experience before I got, more than that, 4 years, something like that. I don't know how long I've been trading for, probably like 5 or 6 years. I can see patterns there, double tops, head and shoulders, support, resistance, trend line breaks, all that. But without the Timewarp signals, yeah, just no, just not going to do it. I don't do it anymore. It's once you see, if you're a non-customer, once you see the power of this software, it's really hard to unsee it. You kind of just need to get it. So what the software does is, it, like I said, it's 12,000 lines of code. Excuse me. And yeah, the software scans the historical data for these timed swing points and then projects those times out into the future. So these little star icons represent perhaps where those swing points were, and then the 12,000 lines of code figures out how to extrapolate those into the future and make sense out of all of the data, which as just a human being, without the aid of the computer, there's just no way. There's just no way we're going to be able to do that without the aid of software like this. Institutional grade professional software, mind you. That's what this is. This ain't no joke. Ain't no joke. Anybody read the New Market Wizards? I read every single one of them, unless there's one that didn't know about. And by read, I mean on Audible, because I don't read books anymore. I have somebody read them to me in my headphones. My experience with 36 interviews conducted for this book and its predecessor, plus the one after that, or the newest one, I should say. Oh wait, how many are there? 3, I don't know, whatever. Anyway, conducting this book and its predecessor leave me with little doubt that the random walk theory is wrong. There's this whole set of beliefs that certain people have that the markets are random, and they're not. They're not random. I mean, we wouldn't be here on this webinar if we thought they were random, right? I think we can all agree to that. Oh, Randall, not a customer. Thanks, Randall. Thanks. I really appreciate you saying that. I'd like to see a Renko chart. Yeah, we can maybe do that later. You know what the deal with Renko? Here's why I don't like Renko charts. In theory, I think they're great, but Renko charts, just my own personal opinion, as a NASDAQ trader primarily, the market volatility can vary so drastically from day to day, let alone the time period, that I feel like there needs to be like a certain set size of Renko bar per volatility size day or even session. Like after the morning session, I might want a larger brick size. The morning session, I might want a smaller brick size. So I never know what brick size to pick or how to determine that. And maybe if I spent more time with them and I could figure out a quantitative way to always have, quote, the right brick size, then I'd probably use them more often. But we can try to do that. I just need to know what brick size and what time frame that we're trying to correlate that brick size with, or just brick size, I guess. I don't know. Maybe you're the Renko expert. We can get into that. Okay. So yeah, this is what I was saying about the emails. Send them out on Tuesday. Let me show you what that email screen looks like. I actually have it pulled up today. So every Tuesday, the company's mainframe system sends out all of the trading signals for, let's see, where is it? Timewarp projections. You can also log into our website and let's see, hopefully my connection's working. And then see the market forecasts here for Wednesday and Thursday. And these are projected out on Tuesday, and then everybody who's signed up to, as at least this should work, for the webinars, will get an email saying, hey, here are the market forecasts for the next day, which is Wednesday, and the day after that, which is Thursday. So we can look here and we can, just as an example, so here are the ES 5-minute signals. This is the histogram, which is you can place this at the bottom of your chart. So these blue lines represent selling windows, and then the white lines buying windows. So from 4:15 a.m. the price is forecast to go up. From 5:30 to 7:15 the price is forecast to go down. Now there are inversions to these times, which probably not going to get into. It's not as straightforward as white up, blue down, white up, blue down. That's just unreasonable. For a market to act like that. That would be too easy. The institutions don't make it that easy for us. However, if you do just do white up, blue down, what's crazy about software is it still ends up being a profitable system. So as we can see, we have all sorts of forecasts: ES, CL, CL 1 minute, 3 minute, gold 5 minute, FDAX, Dow, NASDAQ, of course, Euro dollar, stuff like that. And then also for the next day as well. Okay. All right. So So there's the signals, like I was just mentioning, the white is up and blue is down. That's just a signal. That doesn't mean that we're necessarily going to trade long or short at those signals. We need a setup. We need specific trading rules to correlate to those signals. And we'll get into those in a moment when I throw some charts up. Just check in on the questions here. Okay. So yeah, there's setups, crossovers, puncture trades. There's a few different setups. It's not that complicated though, and that's one of the beauties of this software. This is a quote from Mark Douglas. I always like to read this before I start getting into the charts. Gets me all stoked up. This is I want to say arguably, but I don't even know if it's arguable. This is the trading psychology Bible. Everything started from this. Well, I guess it was the book before this, but this is the one that really made a splash big time. From Mark Douglas, there's a random distribution between wins and losses for any given set of variables that defines an edge. This truth makes trading a probability or numbers game. When you really believe that trading is simply a probability game, concepts like right and wrong or win or lose no longer have the same significance. As a result, your expectations will be in harmony with the possibilities, not wins or losses, just the possibilities, the probabilities of the possibilities. 5 fundamental truths of trading by Mark Douglas. This guy's a consultant to major firms, hundreds of very successful traders, and over the years he's come up with the 5 fundamental truths and the 7 principles of consistency. 5 fundamental truths. Anything can happen. Number 1, that's number 1 for a reason. Anything can happen. Number 2, you don't need to know what is going to happen next in order to make money. Number 3, there's a random distribution, random distribution between wins and losses for any given set of variables that define an edge. And an edge is nothing more than an indication of a higher probability of one thing happening over another. And number 5, every moment in the market is unique. That's what Timewarp, Tachyon Timewarp software does. It gives us an edge, more than just an edge. Gives us an edge, and it hooks you into a company with real people that you can actually talk to on the phone. Mentors like myself, they can teach you advanced methods to trade the instrument of your choice with the time frame of your choice with this software. Number 5, every moment in the market is unique. That one runs through my head all day when I'm trading. Every single moment, like, oh, it's going to go up, it's going to go down. I don't know if I should get in. Every moment in the market is unique, so just execute your strategy. Okay. 7 principles of consistency. Number 1, I objectively identify my edge. Number 2, I predefine the risk of every trade. Number 3, I completely accept the risk, or I'm willing to let go of the trade. You have to completely accept the risk. Number 4, I act on my edges without reservation or hesitation. Number 5, I pay myself as the market makes money available to me. And the strategy that I'm going to go over with you folks really takes number 5 into consideration. Number 6, I continually monitor my susceptibility for making errors. That can be a tough one for a lot of people, myself included on some days. Number 7, I made like 2 errors today, 2 errors yesterday. It's like, no such thing as being a perfect trader. Number 7, I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. Moving along. The slide on the right here, this is Ron's equity curve in the trading room, in the pro training room, that you can sign up for when you buy the software. And then this equity curve over here, this is in ticks of, this is one of the Apex accounts that I qualified for. It's my equity curve on the way to qualifying for that. Okay, bye, Jason. Yeah, see you, man. Let's see if anybody has any questions. So trading's a guess about the past or guess about the future. Well, it's kind of both in a way. But we don't have to guess about the past quite as much with software that scans the historical data. Skip that one. Yeah, so I am so over just reacting to lagging indicators. Like by the time I've reacted, it's too late. I need to know when in the future to be proactive. And that's one of the main beauties of this software is I know that, say hypothetically, at 9:45 a.m. I have a long signal and I have to wait for that long signal. As far as my rules go, I have to wait for that long signal. I might have to wait 15 minutes, might have to wait 20 minutes. I can set an alarm. I can go have breakfast, come back, like, oh, sweet, I got 3 minutes, got to make that trade. And then I know exactly when I have to get out. Can't do that with lagging indicators. You can't do that with stochastics, MACDs, EMA crossovers. You never know when it's going to happen. Yeah, you can set an alert, but by the time you've gotten back to the computer and it's too late. The alert itself's already too late because the alert is from a lagging tool. This is the deck that has been the playing field, if you will, that I feel like is stacked against us as retail traders by the institutions. I love this image. It speaks volumes. That's the institutions. And we're just sliding down. Or what is it? I don't know. Maybe a better metaphor would be we're all trying to climb up and the balls are just sliding on down into their net and we can't stop them. It's stacked against us, but we can stop them. Here's a violation tracker industry summary page. Look at these penalties for Bank of America. 264 records, $82 billion. 264 records. Like what? Paying that many? Why aren't they shut down and out of business? Morgan Chase, 196 records, 36 million, and on and on and on. Why? Well, I know why. Because the government doesn't mind them staying in business when they're able to fine them that much and put the money in their coffers. And Bank of America doesn't mind getting fined because the hoot nanny whatever they're doing is more profitable than the penalties. So the cycle just repeats over and over and over and over and over again. I want to be on the right side. I want to be on the side of the banks. Sorry, other retail traders, but I'll prefer to trade the banks times if possible. And that's one of the things that Timewarp offers. It offers what I call them bank times. We simply assume that the way we see things is the way that they really are or the way they should be. And our attitudes and behaviors grow out of those assumptions. It's really interesting being a human being and having that be true. So the big money leaves big tracks. So that's what the software goes and looks for. It looks for those tracks in sand, and then it gives us an idea when those tracks might be visible again, as if we have some special night vision goggles or something. So big money follows routines. So like this is how the software, one of the ways, just one of the ways that the Timewarp software goes and finds those times to project. Notice that federal regulations, those things are all timed. We had an FOMC day, say yesterday and today. I mean, yeah, it was like 11 a.m. my time yesterday. Suddenly the market just got very active. Like that's not that sudden if you just check forexfactory.com and you know that then that news event is going to happen at 11 a.m. Pacific Standard Time. It's like stay away from the markets for a moment. Scheduled phone calls, even payment receipts, payment disbursement, filing deadlines. Yeah, we should see a trail. We should see it. That's what we end up seeing. We see a trail of historical data extrapolated to the future. I don't feel like I have the energy to read that. There's all the wonderful companies taking all of the retail traders' money And there's us, the 90% of retail traders. I don't actually consider myself quite in that little skinny man category anymore now that I have the software and I've become successful. But yeah, I don't want to be that little guy. I don't want to be that big guy either. I wouldn't mind being this samurai that walks away. Sorry, retail traders. Sorry about that. Don't know what to tell you. Just took out all your stops and I'm just going to relax and walk away, go deposit that money at the local bank. Yeah, it's drafting software in a sense, drafting behind the banks. I'm going to get back to that. Okay, sweet. I actually got through all of that plus the intro in 30 minutes. That's a record. That is a record. I'll speak to the fact that I am a little tired. That's why God invented caffeine. Okay, all right. What's going on? What's going on, everybody? Is anybody who's not a customer, does anybody have any questions so far on the slideshow? So I want to start looking at some charts. Let's see, okay. First, I'm gonna have a big old chug of my electrolytes. Pardon me for just a moment. Oh, okay, that's better. All right, let's get to a more reasonable looking screen so everybody can. We don't actually need that anymore. Let's just take that off. All right, so what should we do here first? How many non-customers do we have? Only one so far as I have been informed. One sec here. Just read a couple of these questions, make sure I'm staying on top of things. Oh yeah, Alpha, definitely. Yeah, we can book a one-on-one. Here, I'm gonna put my Back to the Future email address in. Alpha, if you wanna email me real quick, just right now even, so you don't forget, just email me, hey Jake, wanted to book a one-on-one, I'll send you the info on how to do that. One sec. Okay, post to all. Okay, now my email address is in the chat to everybody. Did you guys get that? Looks like it worked. Okay, so for people who aren't a customer, like what are these dots? What the heck is this? What are we looking at here? Time is it 1:30? Is the market still doing things? Stop it already. Okay. Oh, let me, I don't want the chart moving around on us. Oh no, it's not centering price on scale. Okay. So these are the dots that I keep talking about. White, oops, let's use the right button. White means up. This is a starting point, only a starting point. White up, blue down. White up, blue down. White up, and so on. Some people like to see this as a graphic, I guess you could say. So these are the selling windows. And then let me switch this. Copy, paste. This could be helpful for some newbies. Let's change this to green. So this is basically how the dots are initially set up to forecast. And then there'd be another dot out there in the future as well. And actually, we can tell the software to give us more dots if we'd like. Oh, well, you know what? That's probably enough for now. We don't need to go any farther. Oh, there we go. Oh, there we go. So again, white up, blue down. But is the market going to do this? No. But that's the starting point. We got to start somewhere. So we know that at 5:05 there has been historical significance. There's a historical significance to this 5:05 p.m. time, and there has been buying in the past, multiple times of buying, and when we get to that time, we'll see what happens to see if we have the setup. So these are the signals. That's all they are. But it's not just all they are. I mean, to get these signals takes 12,000 lines of code. You ain't gonna do it without the software. You know what? I'll just leave that there for a second. So now that we see how the signals work, let's go and check out what the market did today with these signals. And by the way, before anybody asks, these are the same exact settings, at least I think they are, let's check, that were emailed out on the NASDAQ 5-minute emails that were emailed out on Tuesday. Swing is an 8, calendar days 7/14. So this is where we tell the software how far we want it to look back in the past. We can tell it to look at trading days or calendar days. The standard stock settings that the software comes set up with are for it to look back for 1 week, 1 calendar week, and 2 calendar weeks. And it's looking for swing strengths of 8. So on the NASDAQ 5-minute, excuse me, that can be a really good, powerful swing for it to go check out. And by swing, I'm gonna go ahead and just go into this for a second. By swing, here's what I mean. This is a native Ninjatrader indicator. I'm gonna put a swing 8, and let's see what happens. So you see these are swing 8s as quantified by the Ninjatrader native swing indicator, power of 8. If we were to make these a power of 4, it's going to be much more sensitive, and we're going to get a much more signals. So let's do that. So there we have an 8. So our swing indicator is set up and synced with our Timewarp swing. So let's switch. Oh, let's not mess with that. Let's leave that exactly how it is, and let's tell NinjaTrader to show us the swing 2s. There's way more of them. Look how many more there are. Very, very, very sensitive now. Swing 2s can be good. It can also lead you into a lot of chop. So let's just stick with 8 and 8. And yeah, I mean, each market can be tuned and optimized. And we have templates for whatever market you want to trade. We have templates available in-house. Why is my alarm going off? One sec. That's crazy. I always have that off. Okay. Where was I? Okay, so let's just get the swings off there for now. Just kind of went down a little rabbit trail. So this is that 14-period HMA that I was referring to. I just really, I love how much faster the HMA reacts than an EMA. Standard though, standard is the 120 EMA. What's nice about the 120 EMA is that basically splits our chart in 2. It's almost like a mean reverting EMA, almost like a VWAP, like a poor man's VWAP. But the HMA uses a square root, I believe, of the most recent prices, and flips much quicker than an EMA or an SMA. No, yeah, Richard, yeah, schedule some time. Send me an email. Got the email there? I know you have my email. Yes, Ted, I said a 14-period HMA. So let's go and check out our indicators. And that's actually set up right within the Timewarp software. So we can tell Timewarp to look to plot a HMA, SMA, EMA, HMA, weighted moving average, VMA, pretty much most that you can think of. Did I say 14? 21, sorry, 21. Use a 14 on my other chart. And the HMA will change and shift colors when it makes the swings as well, which I think is pretty darn cool. So ones on white dots mean up, twos on blue dots mean down, very simply put. So let's look at today. Today was really cool, and yesterday was really quite fascinating. I have a very simple strategy that incorporates these lines. These lines are called open price lines. This line is plotted by the software as soon as the signal candle. This is what we call the signal candle, the candle that is directly associated with the dot. We call blue dots sell dots, white dots buy dots. So as we can see, the dot candle, the signal candle, is directly associated with drawing this line out. So our sell window, for instance, at 6:15 is from, I keep doing that, is from 6:15 a.m., it's California time, to 7:20, and then we have another sell window. Let's just analyze this chart today. And then we have another sell window here at 12:10. And then our day is actually over. I don't trade after the market closes. There's some shenanigans that can happen. I don't know, this is crazy. You know what's going on here, guys? What time is it? Isn't the market closed? This is very rare to see. Is there some news event that I wasn't aware of? Oh, I should make sure I don't have any open trades. What is going on? That's crazy. That's really rare to see that much. Somebody's telling me. Apple earnings, Amazon earnings. Thank you. That'll do it. Yeah, that's a freaking 5-minute, 432 tick candle after regular trading hours. Okay. So let's see if I can get the whole day in here. Oh yeah, easy. Easy on the 5-minute chart. That's basically the whole day. So as we can see, if we just shorted, this is the simplest possible way to trade this software. Actually, you know what? I'm gonna make it even simpler. Let's get rid of the HMA. So just come up here, none. Now all we have is literally just the signals. So the simplest way to trade these signals, and actually, you know what? I'm gonna switch the stop lines. And the stop lines, by the way, for everybody who doesn't know, the stop lines are this little dotted line that that's plotted off of the dot. You know what? I'm just gonna leave them. We're not really even gonna use the stop lines. All I wanted to show everybody is just from dot to dot. To heck with the stops for now. Let's just see what we're working with. And then sell. It's like that was like small win. Buy. Sell. Buy. So I mean, that's crazy. That's insane to me. What the heck? Seriously? Like every dumb alarm that I don't usually have on my phone on Thursday is going off. I'm gonna turn my phone off. That's what I'm gonna do. I'm gonna do that right now. Bye. Goodbye now. Let me just switch the stops to what the standard stops are. The standard stops are 1.5 ATR. There you go. So if we did trade pre-market, well, let's see. Let's get the open in here. The open is right here. So we would have been here. Yeah, I mean, you can see this one could have been stopped out, wicked out. That's not my strategy though. I just wanted to show everybody the power of the up, basically of just the up, down, down, up, down, consolidate, up, down, up. I mean, that's just crazy enough for me. Let me show you what the strategy is though. So that's signals. I mean, we didn't even have, with that, it's like, oh, we don't even have stops in. We're just buying when there's a white dot and selling when there's a blue dot. No stops. Okay, so let's see. How many days of data? 30 days of data. Always load at least 30 days of data. Stanley, please explain the up-down arrows found on the chart moves. Are they another indicator? Please explain the up-down arrows. Oh, those are just the arrows that I drew in, Stan. I just drew these in. Oops, I keep doing that. That's just F2 or Control F2. That's all that is. Illustration purposes. Now let's add filters as we go. Okay, let's add that 14 period HMA in. We can also do the 120, but I'm kind of bored with that for now. So let's add the HMA back in. Just make sure we have 8, 7, 14. Okay. Moving average. HMA still at 21. Okay. All right, so now we're only going to short in short windows if our HMA is also the correlating color. We'll just make it even super easy. We're only going to short in short windows. So we're only going to short in 2 windows, and we're only going to long in long windows, but we can't do that. We can't enter the market until our color matches our dot. So our color of HMA matches our dot. So here, for instance, our HMA turns from blue and then it starts swinging up and turns to white here. We're in a buying window. So this price is, the market is projected to go up. So as soon as this HMA changes color, and I don't care about closing above or below when it comes to HMAs. So we would enter here at this candle, and then we would exit at the next signal. And then let's see, so for this pattern 2, the market opens and our HMA is actually white and it's tilted up. Here at the close of this candle, we have confluence between our selling window and our downtrend HMA. So we would enter at the close of that candle and we would exit here at the buy dot. Here on this pattern 2, we would enter immediately at the close of the signal candle because our HMA is correlating directly in color, and that would be about probably a break-even trade. Here, pattern 1, again, that means up, and our HMA changes color either on this candle or the next candle, and then we would hold that one position all the way till the next selling window. And oh yes, this is a good example. Let me zoom in on this one. So here, this pattern 2, we wouldn't enter short because we are in an uptrend as defined by the 21 period HMA. Here, on this candle, or the next one, we have a short available to us. So the HMA turns down, and then we exit at the pattern 1. And then here, pattern 1, which means buy signal, and then our HMA turns color, flips to the upside here, and then we immediately get out at the next window. So that's a really simple way just to go signal to signal with one position. The software stops, Stan? Oh yeah, sure. Yeah, the HMA is it's super easy. You just go into your Timewarp software if you have it. I hope everybody has it or ends up getting it. Scroll down, moving average, and then you just choose what kind of EMA, HMA, what kind of moving average you'd like. I choose the HMA, the whole moving average here, 21 Fibonacci number, and yeah, that's pretty much it. The software stops. Yeah, the software stops. So these stop lines, Stan, these are determined by, right now I have the setting on average true range, ATR, of the last 7 bars, I believe. I'm not sure if it actually counts this bar, I should know that. We'll just say it does. 1, 2, 3, 4, 5, 6, 7. So the distance from the close, I'm not sure if it's the close or the wick. I think it's the lower wick. The lower wick to the dot, that's an ATR of the last 7 bars. That's what that distance is. So this is our stop area. If we come down and we hit this line, then we could consider that trade stopped out if you're even using these as stops. It is, it's recommended. It just depends on what kind of trade you are. Are you going to be the kind of trader that can actually buy here and just walk away and hang on till 9-10? Well, then more power to you. I still can't do it. I can't trade like this. Emotionally, I just like can't. I mean, I wish I could. Maybe someday. I've never been able to maintain being able to trade signal to signal for more than a day or two before I'm like, I need a trailing stop or something. I mean, this is an optimal day. If every day was this perfect, then maybe I could do it. HMA versus EMA. Yeah, HMAs are plotted. I don't know the exact formula, but the HMAs use the most recent. Something happens in the equation, the algorithm of how an HMA is calculated, where it takes into consideration more of the recent, somehow into the recent prices, and then uses the square root of those recent prices it's the quickest reacting moving average that I know of. Yeah, it's kind of insane actually compared to an EMA. Okay, so there's that way to do it. There's multiple ways we can trade these signals. So we just went over 2 really simple ways. And we're just building on the complexity here. Let's use that same system, which is just correlating the color of the dot with the color of the HMA, and then entering and then exiting at the next signal. Let's go see what that would have done yesterday. I actually honestly have no clue. Wait, did we do the whole day? Oh, it's PM, okay. So let's look at yesterday. This is yesterday, correct? 27, yes. Oh, see, I'm gonna confuse you newbies because I have patterns on, but we're not looking at patterns. I should probably just turn them off. So we don't even have to have the numbers. So make it even more simple. Show signal dots only. We're gonna get rid of the numbers. We're just gonna look at colors. I'm not changing the strategy. I'm just getting rid of numbers, make it so everybody can understand easier. Okay, and the market opens here, 6:30 my time. And remember, all our strategy is buy in the white in the buy windows, sell in the sell windows, but we need our HMA to line up. Our stops are 1.5 ATRs away. So our market opens here at 6:30. Our HMA shifts colors on this candle. So most likely we would enter here on this candle, and then we would hold our trade to 7:55. 7:55, we do have a correlating HMA color, and then we would hold our sell to 8:50, and that would be a loss of 52. Let's zoom in on this, make sure we're not cheating anything. At 8:50, can't see. Another reason I like the open price lines, it keeps me centered on where the signal candle is, even if the dot gets farther away. So yeah, right here at the close of the signal candle, we are in alignment, white HMA, white signal. So we would enter market, and then we would exit here at the next signal. Let's zoom back out. And here at 9:35, we have a sell window. Can't get in right on the signal candle. This candle looks like it flips the HMA to the downside. So let's go worst case scenario. We get in on this candle and we ride that all the way to the next buy time, 84. And then, oh, this little wick right here, you son of a just little, oh, I remember this one from yesterday. At 10:45, we have a correlating white dot, white HMA, and if we're using the 1.5 ATR, if this is our stop, we get stopped out right here. You stinkers, you stinkers. If we had it in our rule set that we could enter one more time in this window, we could enter when the HMA flips to white again. That would probably be on this candle or this candle. So we'll go worst case scenario and we'll enter on this candle. Let me give myself a little bit more room here. And then so we don't get stopped out there. And then we ride that all the way up to the next signal at 12:20. Oh man, yeah, see, I love this. I love this day. I love this example. So at 12:20, are we going to sell right here? No, because the HMA is saying uptrend. 21 period, so that's fast reacting for a very fast reacting type of moving average. So I'm not getting in there. I'm not getting in here or here or here or here or here or here. Boom, and then we switch to a downtrend as far as the HMA is concerned. We'll say we get in here at this candle, and when the market closes here, I never trade past 15 after. So I would get out here at the very latest. So there's a super simple way to trade with HMA and just signal to signal. Again, we're not caring in this strategy, we're not caring about close above or below the HMA or above or below the price line. We are caring about the stops. We're really just wanting to correlate the color of the HMA to the color of the window. Pretty straightforward. I mean, look at the amount of ticks right there. I like this day because it's, you know, realistic. You get a couple losses in there. Let's get the old calculator out and see what that would have been. Calculate. Okay, so we'll do the wins first. 306 plus 107 plus 84 plus 592 plus 315 equals minus 89 minus 52, 1263, $5 a tick on the NASDAQ. This is the micros. So even if we were using micros, it'd be 50 cents. $631 with one freaking micro if you traded all those trades all day. So 1263 times $5 a tick. I mean, we're talking paying for your software and then some. So I don't know, just remember that, everybody, 6,315. Let's go look at Thursday, which is the other day that was forecast in the emails. Oh, I guess we're gonna have to do it again. Let's go over it again. Make it really fast this time. 615, selling window. We have correlated, we are in sync HMA and window. We're entering on this candle and we're exiting here. Here we're entering, we're buy window, HMA flips, entering close of this candle to the sell window. Sell window is automatic, already synced with HMA. Sell, exit, break even. HMA is synced with buy window immediately. We'll just give ourselves a little bit of a harsher time and we'll enter on that candle and exit at the sell window at 12:10. And then our HMA doesn't flip on us to correlate with the window until this candle. Let's give ourselves a little bit of a hard time. That's what you want to do in back testing. You want to give yourself a harder time. And then we'll call that one a loss. And then let's see. So, I mean, let's not even count this one as a win because I don't know if we would have flipped on this candle or this candle, and then we are in a selling window. So let's not even give ourselves the benefit of that doubt. Let's try to be as realistic as we can. I love this strategy. It's so freaking simple. So was that like six grand slippage or whatever on that other one, on that other day yesterday? So let's do 357 plus 635 plus 0 plus 298 minus 17 times $5. Just another $6,000 day or 600 and something dollars with one micro. Boom. Loving that HMA. Questions? Good to know software is locked up in our screenshot in our day. Okay. No, I'm not even doing any break even with this strategy, Brad. We're just going for it. This is like super simple. No break even on this one. I want to get into my break even. This is my more complex strategy. For risk management though, Brad, all I was doing was using the stock 1.5 ATR stop line. So there's a stop. That's stop area, stop field. The actual stop it would be here. Here for a short. Stop is here for a long. Stop is here for a short. Stop is here for a short. On this one, we wouldn't have entered until the close of this candle. So we would have been fine on that. So let's get rid of these. Does that make sense? Yeah, this ain't no Apex strategy. This isn't the strategy I use for Apex. This would be if you're trading your own account. Very good. I'm glad you pointed that out, Brad. Here's the strategy that I use for Apex. That's what I'm going to go over right now. Let's get rid of these. Yeah, with Apex, I mean, I wouldn't be surprised if you use just one micro, you'd probably actually be fine with this strategy. But you could only use one micro for the whole day. Anything more than that, and yeah, your drawdown might get hit if you had a bad day. But yeah, this is not an optimal strategy for Apex for sure. This one is better. Okay, so let me just find a good area. This is perfect, actually. Let's zoom in. Okay, so here's our buy window. Yes, NQ is $5 a tick. Micros are 50 cents a tick. It worked pretty well on the ES as well, and the Dow. But mostly I've been using this particular system on the NASDAQ. Okay, so the the strategy that I've used to qualify for Apex has a little bit of I think, smarter risk management and target management, if you will, than just dot to dot. So, but we're going to use 3 positions, and we're going to enter all at the same time, but we're going to exit. We're going to have 3 different exits, well, most of the time. So we're still going to enter the same way though, right? So 7:20 a.m. we have entered a buy window. So we wouldn't see any of these candles over here. All we would see is 7:20 a.m. Okay, here's a candle, closes at signal. All right, well, what do we do with that? Well, this is a buy window and our HMA is pointed down and is blue. Well, I'm not buying and I'm not selling. With my personal warp strategy, and a Royal warp strategy, if you want to call it that, I need a candle, before I can think about entering, I need a candle to close above this open price line. I need to close above here. I need my HMA to turn white in a buy window. So let's see when we get that entry. Waiting for a candle to close above HMA, and for the HMA to turn white. One or the other has to happen first. We'll just see. Oh, okay, great. Well, it happens exactly at the same time. So this candle closes above the open price line. Quite obvious, right? Make it a little bit bigger. Our HMA flips to white right here. By close of this candle, we are absolutely certainly white. So check 1, check 2. And we're going to enter market. No waiting for pullbacks, no limits. It's kind of a fun strategy because it's just like, okay, go. Let's see what happens. So we're going to enter 3 positions all at the same time. So three separate positions. You're going to want to have an ATM strategy ready with your targets split into 3 and your stops all as 1. And we can get into much more specific details if anybody wants to schedule a, looks like we already do want to schedule some mentor meetings. All right, so we've entered. We'll say we entered right here, okay? There's our entry. Where's our stop? Well, it's not down here. To heck with that. That's too far for Apex. Well, I think our stop should be right below the puncture candle. That's where I've been keeping them. So if the wick came down on this puncture candle to here, down to here, then our stop would be there. If the wick came to here, our stop would be there. But right now, this particular candle has no wick. So our stop is going to be right below the puncture candle. And by puncture, I mean the candle that punctures the open price line. We're going to have 3 stops down there because we're using 3 positions. Okay, so we're going to have a target 1, target 2, and a runner. This is our open price line. So I have this custom Fibonacci tool that I made that I use as a risk reward tool because I don't like the native Ninjatrader one. It doesn't give you multiple targets. It just gives you 1, and that's not how I trade. Not how I trade warp, at least. So we entered here. Our stop goes at the base of the entry candle. 3 stops to be exact. So let's make 3 stops there. Control C, Control V, Control C, Control V. So we have 3 stops. And a lot of times, if I'm trading a 5-minute chart, I will let myself have 10, 15 ticks of leeway. So I don't want to necessarily be right up against the base of that candle. I'd rather have like 5, 10, even up to 20 ticks of leeway, depending on how wicky it is, but no more than 20 ticks. So we'll just say our stops are basically right in here. Oh, I need one more bit of verbiage. Entry. Boom. Let go. There we go. Okay, so our entry is here. Our target 1 is this green line. Our target 2 is the next green line. And our runner, we have no idea. As soon as target 1 is hit, we're going to move our remaining 2 stops to break even. So let's do that in real time and see what happens. I actually really don't remember what happens. Okay, so there's target 1 is hit. Target 1's hit here. And as soon as that happens, we don't have that stop anymore because it's been taken out because our target's been hit. But we do have 2 stops remaining. Those 2 remaining stops are going to be moved to break even. And now we're going to proceed through the buying window and see if we can get target 2 hit. Target 2 does get hit. I'm just going to slide this out. I'm not going to move where the targets are. Our target 2 gets hit here. So that means we only have 1 stop left. And now we're going to hold that 3rd position. We still have that 3rd position. So entry, target 1, entry, target 2. And now our runner, just however we're at break even. And now with Apex, I do have another addition to this strategy as far as managing this 3rd stop. I'm not sure if I should get into it in this webinar because I feel like this is already a lot of info for some people. But let's just say that we were ratcheting our remaining stop every time. Let's see how many ticks is this box here. I'm going to call this our target box. Let's see how many ticks that is. Oops. 236. Okay, so we have a couple different options. We could ratchet our stop up every time we go up 1 box, so 115 ticks, or we could ratchet our stop every time we do a whole box, a 240. For now though, let's just say we're not gonna, oh man, get back here. For now, let's just say we're not gonna be messing with that final stop. And we let that one run all the way to 9:10 a.m. So again, we had an entry, target 1, entry, target 2, entry, target 3. So as far as ratcheting that final runner position stop, you could scale. Oh, I can't grab it. Scale this all the way out. All the way. And you could do something like copy this. And now you have like these standard deviations. So I don't know. I mean, as soon as like your entries here, our second target gets hit here. Perhaps as soon as we get a candle closing above this red line, we move our stop trailing to the second line down. As soon as we get a candle closing above this line, then we move our stop to this line. Then we get a candle closing above this line, then we move our stop to this line. But constantly giving ourselves leeway on the way. But it could be really helpful with Apex to have a trailing stop system like that. And I don't know, maybe it'd be easier to explain with a little box like this. No, I think that was pretty good. That was a pretty good way to explain it. There's a multitude of different ways. You could use an average true range indicator that plots. Back to the Future actually has one. There's a Dropbox file. It's one of the free indicators. I'm not exactly sure where the easiest way to get that. A lot of you probably have received the emails. I think there was an email sent out where it's the Back to the Futures Ninjatrators. One of those free Ninjatrators is a ATR trailing stop. So you could use that for that third position. So there's a multitude of different ways. So this is that runner. So I mean, that is just one phenomenal stinking trade right there. It's a really good system, if I don't say so myself, but I didn't come up with the signals as the main thing. You can't trade this system unless you have warp. How do you get the color of the change on the HMA? The Timewarp actually does that. That's part of the Tachyon Timewarp software. Let's see, how long have I been at this? About an hour. Maybe I should let me go over one more trade. Let's go over a short. This one would have been a loss here on this one. Let's go over a loss. Let's see what that looks like. Just center it up here. Let's get this out of the way a little bit. Okay, so 9:10, we have a selling window, and we have our HMA has flipped to correlate, and we're actually even closing below it, and then we close below our open price line here. So this would be our entry candle. We would enter right here on the close of that candle short, and we immediately get stopped out. Okay, well, I guess we were wrong. And we have 3 positions that get stopped out. So it's really imperative, if you're gonna use this system with Apex, it's imperative that you hold on to that runner as long as you can, and that you take your first, that you do attempt to hold on to your target too as well. Just a 1-to-1, I mean, it's really nice to have a 1-to-1, a 2-to-1, and a runner. It's a thing of beauty. So in this window, I'm over it, but I have been known to somewhat bend my rules, and if we get some candles closing above the open price line, and then another one closes below, it's not outside of the realm of possibility to attempt one more short. And this one would have been successful as well. So it's pretty cool. I mean, so this made up for a lot of the losses on this previous trade. So this is our entry candle, closes below the open price line. And then our target 1 is hit here. Our 2 remaining stops are then moved to break even. And our target 2 is actually hit as well. And then our runner gets taken out at break even, right? I guess it would have been right here at the signal. And then let's go over one long. So we'll go over a stop out, a short, a long, and one more long, and then I'll move on to something else. Okay, so 10:15, we have a buy signal, and our HMA flips to white, and then we get a candle closing above the open price line. So I think it's a pretty damn simple strategy myself. So our wick is right there. So our entry is going to be right at the close of this candle. Place our stop at that wick. Entry, target 1. I got to drag this out a little bit, sorry. Get that out of the way. Go, get off there. There we go. Target 1. Target 2. Our stop is not taken, neither of our stops are taken out of break even, so this one does run all the way to, let's actually zoom out. All the way to here at the 12:10 signal. I mean, geez, at this point, we might as well just calculate the whole day. We only have like one more trade left. Oh, look, this one gets, oh no, that's right, yeah, okay, all right, good. Oh, this is one of, oh, is one of those where it's on the line. If it's on the line, one of the reasons I actually intentionally keep my candle borders wide and my wicks fat is the whole landing on the line thing. Like since this candle here, here's the candle in question. Let's zoom all the way in, this puppy. This is the one that we're looking at here. Notice how you can't really quite tell if this closed below the open price line or not. If my candle border is on the open price line, I'm calling that a close below. And it's on the border. So I would call that a close below. I want to be in the market. Looks like this one, I don't know. This one could have been stopped out. It's really hard to tell on this one. It's also hard to tell if we would have actually gotten this at this HMA flip or not. I mean, let's go worst case scenario. Let's say we don't get in on this one and we get in on this one. Our HMA is blue. We're closed below the open price line. We would enter here. Our stop would be at the wick. And no harm, no foul, small loss. We would enter here and then we'd enter here and we'd have to get out by the 1250 signal to go along. So we'd have 317 tick losing positions on that. Not a huge deal. And it's trading, it's a probabilities game. You'll have that. I just totally lost sense of space and time and forgot that I was on a webinar for a second. I've been looking at charts too long today. Oh, okay, yeah, and this is that other one where like I don't really know if we would have caught this or not. It would have been a perfect world. Yeah, maybe we'd catch this soon as the HMA flips at the same exact time. I mean, probably would. This is the candle that flips the HMA, but let's just say we don't even get that one. Give ourselves a hard time with this day as far as the back testing goes. So let's calculate and see what we come up with. I can already tell you it's going to be nice. Take an overview here. Spread these out just a wee bit. That's that loss. Yeah, it's looking pretty nice. That's a little more reasonable apex trading wise. This system, I feel like. Where's my calculator? There she is. Okay, so starting with the wins, 117 plus 236 plus 636 plus 128 plus 67. Let me know if I'm forgetting or fudging anything. Plus 91 plus 45 plus 300 minus 17 minus 17 minus 18. Oh, well, it's whatever. It's same difference. Minus 0 minus 80 minus 79 minus 76. 13,333 times 5. It's another $6,000 a day. So it's funny. It ended up the same as just the dot to dot. Interesting. It's really interesting because we're using multiple positions here too. Or with micros, it'd have been about $600 after fees. Okay, let me look at some questions. TradeStation, custom Renka, 5 brick size, 2 offset. Don't know what the equates to on Ninja or other platforms. Yeah, I don't know, Randall. Are you a customer, Randall? I guess not, since you're asking. We can try. Last time I tried to switch to Renko on a what was it? It wasn't a webinar. It was a Zoom meeting, and my computer did not like me for it. The HMA on the NASDAQ 5-minute chart that we're looking at is as a 21. Welcome. Yeah, I'm a little nervous to switch to a Renko, but Randall, just because we're in a webinar right now, Randall, if you want to have a one-on-one demo and you're really interested in buying the software, you can contact Dave. He's in charge of sales and getting all that stuff set up. Dave, do you want to go ahead and we're probably nearing the end of my time here in the webinar. Do you want to put your email and stuff in the, you still there? And whatnot in the chat. There you go. Thank you, Dave. Thanks, Dave. Appreciate the compliment. Do you use the reversal patterns in your system, like the pattern 4 and 5? Yes, I do. What's kind of interesting though about this particular system is it works because of the open price line and the need to close in the appropriate direction of the open price line to correlate with the pattern and the HMA or EMA if you're using one. You don't really need the patterns. I mean, some are completely obvious, you know, like really big 4s and really big 5s, but I honestly qualified for one of the Apex accounts that I have using this system without using patterns because I wanted to just prove that it could be done for people that don't have the software or just for anybody who, I don't know, just to be able to do it without having to know what the heck a pattern 4 and a 5 are. Oh, you're welcome. Okay, bye, Larry. Jacob, are you remember I wish special finish for T1, T2? Yeah, Bill, shoot me an email. Shoot me an email and I'll send you the file, the XML file or whatever it is for the fib tool that I made. Sure. Let's look at that other day. I'm just curious. So we know that it was like $6,000 if we're on regular NASDAQ. Let's see what would have happened if we used my multi-target system here. Just gonna blow through this entry. And then what, no close below, no close below. Maybe that would have been a close below at the same time. We'll just say that that one does get stopped out. This one was our close above. Oh, I remember this one. This is why I always put the stop 10, 15, 20 ticks below because of that stupid wick, 4 ticks. That wouldn't have stopped me out because I don't put my freaking stop right on the wick of the entry candle. Oh, looks like this would have. It looks like this would have been our entry candle. Oh no, because we still need to close above. Sorry, getting tired. That one did not close above. So this would have been our entry candle. Let's see, and then selling dot, close below here. We'll give ourselves the non-benefit of the doubt. Call it that one. And then it gets all sorts of crazy on that FOMC. So I actually stopped. I highly recommend if there's an FOMC meeting in the afternoon that's forecast, I highly recommend just staying away from those. I mean, look at this. Oh my God, what's happening? Just, I don't know. Yeah, I don't know. I mean, I say we didn't know about it and we entered here long. And then our stop is still, you know, how far is that? 4 ticks. Yeah, actually, we wouldn't have been stopped out there. On a 5-minute chart, I'm like at least 10 ticks, more like 15 ticks. And just so everybody knows, I'm not fudging. I said that in the beginning. So there's our wick. I mean, that's 5 ticks and it still wouldn't have hit us. I usually do 10 ticks, so it would have been down there. So it looks like that trade actually did work. I remember that from yesterday, actually. I remember that exact moment. Taken out on the next one, break even. I mean, but you know what's cool is that Timewarp caught for everybody who's, you know, not a customer yet. Like, Timewarp caught this up move. It was early, but it still caught it. Still freaking caught it. And it actually caught this down move. It was a little early here too. And that's, institutions will do that. They'll go a little early, they'll go a little late. That's one of the reasons that I like to use the close below the open price line. Like, here's that moment in time. Well, give me something else. Give me something else. Either like give me the HMA pointing down, or if you're using the EMA, give me some candles closing below, or give me a candle closing below the open price line. Okay, so let me finish the Royall warp method, as I call it. My last name's Royall. So let's see. So this one, now let's flag them out and then maybe call it. So here, selling window, 1220. Can't sell, can't sell, can't sell, can't sell. Oh, now we're going to think about selling, but we can't sell until we close below the open price line. Here's our entry candle. I like to think of it as we have an ATR of 1 to determine where our targets are. And it looks like that would have been stopped at break even as soon as, oh, this is the end of the day anyway, right there. Okay, so let's flag these puppies out. Okay. All right, so 6:30 a.m. So 6:35, 6:40. So this would be our entry candle, closed above the open price line. HMA has turned white. Target 1 either here or here for certain. Now our stops are break even, and we don't hit target 2, and we exit both remaining positions. If you don't hit target 2, then you have to exit with this system. If you don't hit target 2, I'm going to stack them up all on top of each other. I think that's kind of better sometimes. If you don't hit target 2, then you have to exit 2 positions at the next window. Okay, and then 755, sell window. This one is entered here and stopped out. 90 tick stop outs on the NASDAQ 5-minute are, I mean, you'll have that. You will absolutely have that. That's why if you're trading Apex, absolutely only trade micros. If you're trading a 5-minute NASDAQ, you can't trade minis. You just can't. You can't do it if you're trading, unless you're trading like, I don't know, like a NASDAQ 1 minute, a 1 minute maybe. I've learned a lot about money management from this whole Apex journey that I've been on for 6 months. Let me know if anybody wants an Apex session, mentor session, because I've learned a lot of lessons, so a lot of you probably won't have to. Send me an email and then I'll send you a link on how to set that up. 850 entry does not stop us out because my stop is 10 ticks below that wick. Target 1, target 2. And we're exiting that third position at the close of that candle. So there's those. 935, sell, close below open price line, blue correlation with the HMA, target 1. And now our remaining stops are break even. So, oh no, we hit target 2 right here. Sweet. You see that? Sometimes I don't know. People realize. Just extrapolate that out a little bit. Target 1, target 2. And then our third position is running and gets hit at break even here. And 1045, target 1. And target 2 at the same time. I know that's the case actually because I actually remember this. And then stop to break even. So let's total this up. Yeah, it's pretty, I mean, you guys don't think that's too complicated of a strategy, do you? I don't think it's that bad. I could just hear Michael, right? You're showing too much, Jake. That's too much. I don't think so. I'm not just going to show dot to dot. It's my webinar. Okay, let's do calculate. Let's see if we, I mean, this day was also like $6,000 or 600 using micros. So let's say 298 plus 304 plus 227 plus 83 plus 62 plus 33 plus 94. 2, 2, 3 plus 1, 13,338 minus 90 minus 90 minus 90 1068. Did I miss any? Nope. So if regular NASDAQ, 5,000 or so. So that'd be 500 with micros, 3 positions. So like that's what you want. If you're trying to qualify for the Apex 50K account or 75K account and your trailing drawdown is between 2,500 and even $5,000, and your target is somewhere between $3,000 and what's the next target? That's 3, and then there's a 5, 7. You kind of want to you don't really want to shoot for much more than $500-600 a day with micros, and you just want to keep consistent, really. Yeah. All right, Ted. Yeah, no, Jake is there. Oh, sweet. Okay, it's very clear. Oh, good. Okay, thanks, Ted. Appreciate that feedback. Really. Thanks, Ted. All right. I'm getting tired. I think that should be enough for you folks to chew on. Feel free to, mess with your software settings if you have it already, and just do some back testing on the strategy that I just presented. And or either way, whatever you're doing, if it's working, keep doing it. If it's not, maybe do some back testing with what I just showed you. For anybody who's not a customer, which it can be argued that this webinar is mostly for, get in contact with Dave. His email is on the chat. His phone number is right there. It says call for special deal on the software. I am going to run through just real quick before we leave the software itself. Let's see. Where's my slideshow? Yeah, that's enough. That's enough charts for me today. Okay, so now we can see by a study of time periods and time cycles, we can learn why tops and bottoms are found at certain times. It's so apparent on those 2 NASDAQ 5-minute days, and why resistance levels are so strong at certain times and bottoms and tops hold around them. You know what I'm gonna do? I'm gonna show you guys one more thing that I clear all drawing tools. Check this out. I'm not even going to go over the whole strategy, but if anybody wants to book private mentor hours with me, we can go over this one. This one is my favorite for Apex. So we go in and we grab the opening range indicator. This is free natively. Sorry, not natively. It's free on the Ninjatrader ecosystem. Very simple. Just plots the high, the low, and the middle of the first 10 minutes of trading action from the open until 10 minutes. And there it is. So here's our open. I'm just going to blow through this, but if you want to book mentor hours, we can go over the specifics of this. Here's our open. This is the high of that pit session, if you will, the first 10 minutes. So it's really just like the first 2 5-minute bars, right? And then here's the middle, and here's the low of that first 10 minutes. Then I'm going to take my other custom Fibonacci tool. I'm going to load it. It's GAN octaves. Okay. Then I'm going to place the bottom of the fib tool on the low of the opening range. I'm going to extrapolate that out. Oops, I didn't realize how far I was zoomed out. And now what I have is I've created a grid system based on, well, it's not quite a grid system. I've created a lattice, if you will, a network of horizontal lines evenly spaced based on the volatility of that pit session, this volatility right here. So this is our opening range. And I don't know if anybody else noticed, but we actually started trending on the NASDAQ for the first time. I don't know, there was like multiple weeks there where it was like a lot of rangy nastiness where we would just be stuck in this opening range, and we'd pop out a little bit and we pop down. But last couple of days we've actually popped out to the upside and stayed up there and down to the downside. So we'll still trade the exact same signals the way that we were with the open price lines and the HMA and everything, except now we're going to be waiting for pullbacks to the next line. So this is the candle that we took as our signal candle for the previous strategy, the Royal Warp strategy. This one's like more of like my Royal Warp Apex strategy. It's a little easier for Apex, perhaps. I guess it depends on the instrument and the person. So this candle closes here. We would want to pull back to this line with a limit order, but it doesn't pull back to this line. We actually get a candle closing above, so then it closes above this line. Then we want to pull back to this line. That doesn't happen. Then a candle closes above this line, so we're looking for a pullback to the line below, and we're looking for a target 1 of 1 line above and a target 2 of 2 lines above, and our stop 1 line below. Entry, target 1, target 2, and then you could also incorporate that runner. So the beautiful thing about this strategy is that we know what our risk is throughout the day. It never changes. So we can determine how many contracts we're going to use throughout that trading day. And we also have a 2-to-1 and a 1-to-1 risk reward. Same way we manage the trades as far as ratcheting the stop losses up to break even when the first target is hit. But this way we know what our risk is going to be, and we can maximize our contract flexibility. Okay, just enough of that. Okay. Oh, thanks, Doug. Oh yeah, I'm presenting. This is Jake. This is Jacob. Dave is the guy in charge of hooking everybody up with the software. Apparently there's a special deal. You got to call Dave today though. I'm gonna give everybody a special deal real quick because that's part of my job. But I guess Dave's got other stuff that he can add on top of this awesome sauce. Okay, so let's go to backtothefuturetrading.com homepage. Let's grab my oh yeah, this is my own personal slide that I added to Michael's. What hammer out of all of these hammers, if you just got a brand new job in construction, and we're working with a bunch of guys who've been, working in construction for quite some time, what hammer are you going to bring to the job site? Because you always have to bring your own hammer. They're not going to give you a hammer. Just like show up with your own tools, boy. Well, I can tell you, unless I want to get made fun of and maybe kicked a few times, I'm not going to show up with this hammer. I'm going to show up with this blue one. If it's any kind of construction, if it's demo, I'm not showing up with this hammer. I'm showing up with this hammer. What's the analogy I'm trying to make here? This little hammer right here, this is the lagging indicators. This is free indicators. This is all the other BS out there. Tachyon Timewarp is this blue hammer right here. Professional, institutional grade. Yeah, it costs more than this thing. But I don't want to be embarrassed when I show up to the job site. I want to show up with the tools that are appropriate for the job. I almost can't believe that I used to trade thinking that I wouldn't have to invest in software to be successful in a business of trading. Like, yeah, this doesn't. I mean, some people can do it, I guess. I found it much easier just to buy software like this and have half my job done for me, at least. So yeah, people who don't have the software, you got a serious choice to make. Free lagging indicators that 95% of losing retail traders use, or one-of-a-kind professional institutional grade trading software. Why wait? Invest in your future with Back to the Future Trading. What's that weird smell? I feel like something's burning. I better close this webinar down. I don't know what's going down in my kitchen down there. My 7-year-old's down there with her grandmother. And I don't know what's happening. They better be breaking me cookies. GAN octaves in fib tool. Yeah, that's it. It's something. It's a fib tool that I just made with 33.33 percentages in increments. Okay, so what's included in the purchase of Tachyon Timewarp? Well, 2 lifetime licenses. You can use that on 2 different computers. And oh great, that's my smoke detector. I wonder if my house is on fire. It really smells like maybe my house is burning down. I wonder if I should be done. Okay, let's just go through this. We get free lifetime updates on the software. Free white glove installation. So we will set you up. Don't even have like, I don't know how to install it or like help me with the settings. We're gonna help with that. Free video archive, so many videos and training. If you buy today, I've heard that somebody might throw in a free hour of mentorship time with me. Not training. This is later down the line, like advanced stuff, but you got to buy today, I think. I don't know. Maybe Dave knows. Call Dave. There is a limited time promo code. It says call me, but that's not. It's Michael's stuff or my old stuff or something. Warp off. Warp off is the code that you want to put in the cart checkout. Purchase today. Here's the here. I'm gonna copy this puppy. Oh, not the whole thing. Can you guys hear the smoke detector? Go right there and buy yourself the software. Buy now. Buy now. So that's my last slide. Oh no, there's one more. So let's see. So we'll go to product store. It's a link that I just sent you folks. Thanks everybody for coming, by the way. Tachyon Timewarp. Learn more. Oh, and by the way, Back to Future Trading is 83 reviews. These are all real people. I actually know some of these people. I'm one of them as a customer who wrote a 5-star review for the company a while back, a couple of years ago almost. So now we're on the Timewarp page. Feel free to read those reviews. Let's go back to that. %. And I run a company. I run a contracting company, and we're one of those kind of companies that, you know, we base a lot of our leads that are generated based off how good our reviews are. And I can just tell you that it is hard to keep a 5-star rating for any company. And the Back to the Future has they've been in business for like 11 years or something, right? 10, 13, over 10. I think maybe, I don't know what's going on down there. Fantastic. Such accuracy, simply the best. Phenomenal software. These are real people. Look, oh, that's Robert. I think Robert was on the webinar earlier. You know, just to say, like these aren't fake. This is a legit company. I love Michael and Ron. I wouldn't be doing this whole thing. Like it's totally worth the cost of the software. Plus, I'm going to give you $500 off code, Warp Off, WARPOFF. Learn more, I said. Oh, maybe my router is on fire. Nope. Scroll all the way down. $24.95. Put in Warp Off. To me, $2,500. I've run multiple businesses. $2,500. If you consider trading your business, which you should, I don't know, it's kind of just a hobby, then just stop trading. Just stop. Why? Why is it just a hobby? I'm not a hobbyist. So you click on Buy Now. Yeah, is the house burning down? Oh, you're not cooking anything? Okay, I'm still in the webinar.
It's real smoky in here.
Oh, maybe the neighbor is okay. I'm gonna shut the webinar down. I think the neighbor is probably grilling something and it's coming in my window or something.
Really, Jake?
Okay. All right. Bye now. Guess I'm scroll down. Purchase agreement X. Ron's Pro Training Room. You can add that on for a discounted rate today. Right now, we'll just say 0 for that, and you can always change that and update. Let's just make sure that still works. WARPOFF. There you go. 1995. Bye now. Okay, I gotta go.
There's really a lot of smoke in Olivia's room.
Stop showing screen. Okay.